Hello and welcome to the i3 podcast. My name is Wouter Klein and I'm the Director of Content for the Investment Innovation Institute. For more information about our educational forums for institutional investors, please visit our website at www.i3-invest.com. There you can also subscribe to our complimentary newsletter i3 Insights, in which we discuss investment strategy and asset allocation questions with asset owners around the world. Now, as you all know, we love our disclaimers in this industry, so here's ours. This recording is for educational purposes only. It does not constitute financial advice. Please enjoy the show. Welcome to the i3 podcast. I'm here today with Professor Deep Kapur, who is Director at the Monash Centre of Financial Studies. He's also a member at the Investment Committee of Superannuation Fund REST. Professor Kapur, welcome to the show.
Well, thank you for having me. This is an honor.
You're welcome. So you have quite a long career with quite a diverse background in both investment banking, in investment consulting, and now in academia as well. But I was quite happy to see that you originally started your career as a journalist, as a fellow journalist in Bombay. Can you tell me a little bit about that?
Sure. I would say that 2 years that I spent as a journalist in Bombay in, long time ago in the early 1980s. That was simply awesome. I just loved every second of it. So I had just finished my master's degree in economics and sort of accidentally landed a job at this new and India's first business magazine that was modeled on Business Week. And at the age of 23, I was the de facto managing editor, and it was great fun, building or helping build a media company from the ground up in a completely new area. So I really enjoyed it. And I also was writing as a stringer for Business Week, which is what kept the lights on. I mean, in the early 1980s in India, journalists made very little money. It was not possible to keep body and soul together on that salary. So no, it was, and I would say that journalism, it's something very close to my heart.
Are there any particular stories that you wrote that you're particularly proud of or that were breaking?
I don't think, because it was a fortnightly magazine, we didn't, it was not the internet age, so there was nothing sort of breaking until the issue hit the stands.
Yeah.
In those days, business was considered boring in India, So it was all about politics, but there were all these, fantastic stories about how the Ambanis were transforming the Indian industrial landscape. I did a story on Dhirubhai Ambani for Business Week. And at that point in time, not many people were really aware of the transformation that was taking place. And, today, the Ambanis are the largest industrial conglomerate in India. I had the experience of interviewing Ratan Tata
Wow.
He had just come back from the US and started at the Tata organization. I was fortunate enough also to be able to comment and, write on the transformation of the Bajaj enterprise, being able to spend a lot of time with Rahul Bajaj and also with a company that today is very well known called Thermax, run by the Agas. So, but, with the benefit of hindsight, you're the first business magazine, you're the first group of journalists who want to write stories about transformation in business and how it's creating jobs and how India is changing. So it was easy at one level to get access, and it was very, very good. And I learned a lot about how business and markets work from those 2 years.
Yeah. Sounds very interesting. So how did you get from journalism into investing then?
My office at Business India, that was the name of the magazine, and it still exists, is doing very well. My office was just across the street from the Bombay Stock Exchange. And sometimes, in between stuff, I would just walk across and see how the actual execution trading was taking place on the floor. It was not electronic, it was the old style. There were people standing around selling, buy and sell, and hand signals and whatnot.
Did they also have the colorful shirts on to make them stand out?
Yes, that's right. So I think that sort of got me interested in investing, and I started to learn more about the history of the Indian markets, not just the stock markets. Options trading started in India in 1875 when people used to sit under trees and make markets in options. So that's how it all started. So I ended up going to the Australian National University to do a PhD in economics, but it was all in the area of behavioral economics. So that's sort of the background to my continued interest in the investing area.
Yeah. And I think you then went into investment banking. Are there any sort of war stories that you can share with us?
Well, it was just a sequence of war stories, right? So actually, after finishing my PhD, I taught for a year. The usual young academic. I'm teaching finance and so forth. And then I spent about 2.5 years in investment consulting, and that was with Towers Perrin and then Frank Russell in Sydney. And then I left the country and worked with a startup boutique. I mean, I'm a sort of a risk taker. So did the boutique thing for a few years and then went into Salomon Brothers and spent 10 years at Salomon. But in terms of war stories, during my time in Salomon, we went through and I was based in Asia, even though I had global responsibility for some products. Later on, I started in Singapore. And so, the Asian financial crisis was quite interesting to see what was going on. And, we were very close to a number of governments trying to defend their currencies from speculative attacks from macro hedge funds, advising them on how to cope with some of that was quite interesting. Then, of course, we had the 98 implosion in LTSM. And, LTSM, many of them were my former colleagues from Salomon Brothers. And that was quite an interesting event. And then, the 99 NASDAQ and stock market. So it was quite a learning experience.
Yeah.
And
so you've seen a few crises during your time.
Yes.
Now, it's always, they say every crisis is different, but do you see any sort of similarities or are there any lessons learned from the experience you went through?
So I think every crisis is different, and the response to the crisis also is different. And what I have learned through sitting in the middle of trading desks or banks and so forth, where you're seeing the flows, you're seeing how allocators are responding and so on. What has changed today is, I could not have imagined the policy response that we have seen in 2020, looking at what happened, say, during the GFC. In the GFC, policymakers, I'm not talking about, Australia was, on the mark, put a line under the sand and explain to the rest of the world that the banks are not going down.
Yeah.
But, by guaranteeing bank debt, de facto guaranteeing bank debt. So that was fantastic. But that was not the case in the United States, which is the reserve currency of the world. And we went through that period of time where we didn't know if who was going to survive. We didn't know. I mean, if you think of it, if a systemically important bank goes down, then capitalism as we know it cannot function.
Mm-hmm.
And we went through a long period of time when we didn't know, I mean, if my former employer, which became Citigroup, I mean, is it going to survive? And this time, the policy response was very swift, and that surprised me. So I guess the lesson was learned that you don't dilly-dally and dither.
Mm-hmm. I think this time it was also a combination of fiscal and quantitative stimulus rather than just quantitative.
Yes. But even the Fed, basically coming out and saying, yeah, we'll do whatever it takes, right? I mean, you remember Mario Draghi's comment about the euro, we'll do whatever it takes.
Mm-hmm.
The Fed didn't really say much. It went and did it. I mean, I think going and buying corporate debt was a big move. I mean, we are going to pay for the consequences further down the road, but we would have had a GFC style crisis if the central bankers didn't step in. And then, as you correctly pointed out, the fiscal response was also necessary.
So do you think that the original decision to let Lehman fail was then a mistake because it created too much uncertainty?
Yes, that's right. I think that was a complete mistake. I think Lehman should have been bailed out. We would not have had the scarring of the global economy that took place, and subsequently a lot more needed to be done because Lehman went down.
Mm-hmm. But isn't that the nature of capitalism, where some firms fell and others don't?
I think, but that it's sort of hard to apply that to an interconnected financial system. So you can let Lehman fail, but you have to live with the consequences.
Yeah, they probably underestimated the interconnectedness of the whole system there.
That's right. I mean, today we have all the capital requirements and so forth. So today it is sort of hard to imagine a Lehman style implosion taking place because the safeguards have been put in place. So this is all hindsight, right? I mean, people were making policy on the fly, and the different parts of the US government were, it's new, right? I mean, it's like the pandemic, it kind of comes out of nowhere and then you're struggling.
So are these war stories and your experiences from the crisis something that you teach your students as well? What is your current focus at Monash?
So I don't do a lot of teaching. My role at Monash is to catalyze industry and policy relevant research. So it's sort of research of practical relevance. Australian universities over the years have focused more. I'm not talking about the sciences and medicine and so on. The business faculties in Australian universities have over the last 20 years or so become more academic. It's academic scholarships, it's expanding the frontiers of knowledge in theory, for example, or say better statistical techniques and so on. Which is completely necessary because you do need to advance knowledge. Yeah. But the pendulum seems to have swung too far towards that, unlike, in the 80s, perhaps, where economists were very involved, academic economists were very involved with, with the real world. So if I look at, my head of department when I started at ANU, Max Corden, he went on to the IMF. So that seems to, somehow the pendulum seems to have swung a bit too far away from the real world. So my role at Monash Business School is to work with the school and try and bridge that gap.
Yeah, to bring the theory more towards the practical.
That's right, side. The applications. Yeah, it's, how do we solve a problem? So that's really my role. So the center that I look after does industry relevant and policy relevant research. And most of my interaction with students is around that, as opposed to teaching conventional courses. And I also sit on the business school management committee, and they sort of work around that. I'm a member of faculty member of the Blockchain Center as well, which is outside the business school. So it's a portfolio of activities all around this whole question of how do we bring the business school to a position where it's actually solving problems. In addition to, the academic scholarship will remain the core, but how to take that and apply that to the real world.
Yeah. Now we hear a lot that the pandemic obviously makes it hard for international students to attend universities here. Have you been impacted by that as well?
Yes, we have been, but not as much as we thought we would be, in the sense that, of course, this came out of the blue. And if you look at the economics of Australian universities, and, Monash is not an exception to that, is that international students provide a big part of our revenue stream, and we use that to fund research, and not just business faculty research, but medicine, sciences, and so we have been affected. But many students who could not come into the country chose to study online from China and India and elsewhere. As opposed to turn around and say, if we cannot physically be in Melbourne, we're not coming. I mean, we'll defer our degree. So that did not happen to the extent that one would have thought it would. But, if this situation doesn't resolve, for the next 4 years, say, then I think the consequences will be severe on the revenue, because I mean, the attraction of coming to Australia to study is bundled in with, I want to live in Australia because I've grown up in Thailand, and it's time for me to experience another part of the world.
Yeah, fair enough. So talking about the pandemic, what is your take in terms of the impact on investments and markets?
I think the pandemic has brought focus to tail risks in a way that, everyone has heard about tail risk, right? I mean, some unknown comes and hammers your portfolio.
Yeah.
Although in this case, you could say it was not an unknown, but a known unknown, because in 2015, apparently Bill Gates in an interview did warn the world that something like this could happen.
I saw that clip. I actually put it on Twitter at one stage, and I thought it was quite interesting. But, probably with any event that happens in the future, you can find somebody that said something related to it in the past. So I'm not sure how.
That's right. That's right. Yeah, that is right. So I think there is greater appreciation for risk management in portfolio construction today than perhaps there was. And I think things will change. I mean, look around investment institutions around the world. And I'm not talking about the hedge fund industry where, the better ones, the successful ones are slavishly focused on risk management. But in most investment organizations, risk management is kind of buried in there somewhere. But if you take a look at a big platform hedge fund, the chief risk officer has her own empire, reporting to the chief executive officer, does not report to the chief investment officer, has the ability to shut down a strategy if she believes that this should be shut down for whatever reason. And this is sort of not directly relevant to the question, but I think that is the difference between a successful hedge fund business and an unsuccessful hedge fund business. It's about how they manage risk. And I think this experience last year will bring that to the fore. You can no longer have the risk management function be a second-class citizen of the organization. I think the risk management part of the business needs to be empowered. It should not, in my view, be under the control of anyone other than the CEO of the firm.
Yeah. Now, you also just mentioned you are involved with blockchain, and also we spoke a little bit in the past about machine learning and artificial intelligence. You've been exposed to those sort of techniques for quite a while, and
Yes.
sometimes I get a little bit of an idea that people involved in the area are a little bit cynical about the hype around it, because they say, well, we still use the same techniques as 30 years ago. What would you say has changed?
Right. So you're absolutely right that many of these techniques have been around for some time, and as you pointed out, I've had sort of early exposure to the area. So in the early 1990s, I ran about $500 million for a sovereign wealth fund on a short-term FX strategy that was basically a machine learning technique applied to what was then a lot of data, but that's peanuts compared to what it is today. Those, if you think about what machine learning quants deploy today to data for investment analysis, many of them have been around since the 90s. Random forests, support vector machines, long short-term memory neural networks, they have been around. The difference today is, of course, there is more data that you can apply it to, a lot more, especially for short-term purposes, maybe not long-term. There's a lot more data. You can process it a lot faster. You don't need a supercomputer and wait for 2 days to get some results out, which you had to in the early 90s. Today, you have more computing power, cloud computing. So the process has, the application side has developed quite a lot. And there's also a lot more talent in that area. It's not easy. And, there are good, just like there is a good fundamental analyst and a less effective fundamental analyst, the same applies to the machine learning quant applications world.
Yeah.
So there's more talent, there's more data, there's more computing power, but the core discoveries that people are working off you're absolutely right, there's not been a lot of evolution.
I thought it was interesting that you mentioned that it looks a lot at short-term data.
Mm-hmm.
In that context, do you think that a long-term investor like a pension fund has any business getting involved in machine learning?
I think it does, because even long-term pension funds do not have the luxury of ignoring what happens in the short term. So let's say, you're a long-term pension fund and you decide, or you had decided 10 years ago that, there's all this academic evidence and, other stuff that value investing is a good thing. And your entire portfolio just constituted value stocks. Where would you be today?
Yeah, in trouble.
That's right. So, you wouldn't have anyone's pension left to manage. So I think, that's a somewhat facetious answer at one level. But I think it's a question of how you use machine learning and AI techniques in investment management. So at one level, you could be like a Renaissance Technologies, and I understand the Medallion Fund is somewhat short-term focused, and they have a awesome Sharpe ratio, and that's sort of one way of using data to drive investment decisions. And then you've got Warren Buffett, who, if the press is to be believed, doesn't even use a computer. And then and there's a lot of positioning at those two ends of the spectrum. So you could say that I'm a fundamental long-term investor and I'm not really interested in short-term trading. So what would you use machine learning for? You could use that to manage risk. You could use that to extract information from unstructured data that could inform your long-term analysis. You could scan the comments, how many times has someone on the board of company X mentioned climate change in the last 12 months? in interviews, in blog posts, in press, and so on. So it is possible to use some of these techniques. So you may not want to run strategies based on that, but you could use machine learning and AI techniques purely as a research assistant.
So when you ran a FX strategy, how did you use machine learning in that context?
Pattern recognition. It is, what drives the FX market in the short term.
Yeah.
It was purely pattern recognition. I mean, today you would call that supervised learning.
Yeah.
In the sense that, I had my priors. So if the machine came back and told me that rainfall in Argentina has an impact on the Deutsche Mark, I would probably not have used it. So how what data you give to the model, and what we found through that exercise was that we got better models than the conventional econometric techniques, because machine learning could do what statisticians would call nonlinear analysis more effectively than the statistical techniques that were available at that point in time. So let's say the response of a company's valuation to changes in interest rates is not linear. When the discount rate goes from 5% to 4%, the stock price reacts a certain way. It's not exactly the same when it goes from 2 to 1. So it was helpful in that context.
I think those nonlinear patterns are some of the areas that are potentially most interesting going forward as well. But from an investment perspective, they also throw up some governance questions, because if a computer can recognize a pattern that humans can't, then how do you build a safeguard around it? Do you see that as a potential issue?
I actually don't see that as a potential issue. The issue is not, and I'll walk through my thinking in a second. But the way I think about it is, AI governance in its application to trading strategies, or not as a research assistant. That AI says, we think this is the pattern, and then you as a fundamental investor can decide whether you want to use it or not. But if you're saying that AI has looked at some data and developed a strategy and it's automatically executing that, yes, you need to have governance around it, just like you need to have governance around human beings. You've allocated $500 million to 5 humans to invest in emerging markets using fundamental analysis. I mean, do you not need governance around that? Of course you do.
Yeah, but it might be easier to understand that process because you can sort of look at a change of this decision.
That's right. That's right. So what you have to, I think, my view is that let's be pragmatic around it. There's a lot of evidence that, firms using AI for short-term investment decision-making have been enormously successful. I mean, not everyone, but there are a few who have been very, very successful doing that. And if you then take a look at, typically how these firms put governance around these types of strategies, what are they doing? They have clear lines of accountability around the development, deployment, and update of the algos. They make sure that the compliance staff have a general understanding of how they operate. They deploy sufficient resources to manage and monitor the trading strategies, what's sort of going on. And, and this is all done in real time. It's not, a committee meeting once a quarter and then reviewing what happened. They have, real-time records, which the chief risk officer and her entourage are looking at. And then finally, they have stop losses in place. You have to have that. You cannot say, oh, this strategy has a 40-year fantastic record in back tests, and it's had a really bad 3 months. No, I mean that doesn't work. You've got to have that kill
switch
process. Kill process in place. You have to predefine at what point, how much money are you prepared to lose from the peak before you shut it down? You can't give money back to that strategy if it starts working again. So I think one has to be pragmatic around it. You cannot simply just say, well, here's $500 million and run it because the back test has, you can't back test the future. Your only defense against that is a slavish adherence to a predefined stop loss strategy.
Yeah, so once again, it comes back to risk management, putting proper
Yes.
guidelines around it. So what if you do a bit of crystal ball gazing, do you think that the future of investing will move towards this type of investing, or will it remain sort of a niche area?
I think the use of machine learning and AI to assist decision making will explode. I think using AI and machine learning to manage money where the machine makes the decision and executes everything, I don't think it is going to take over the world. I think there is also limited capacity in that area. I mean, look at what's been going on in the markets the last 7 days with, GameStop and whatnot.
Yeah, that was interesting.
How is it, I mean, a bunch of sort of retail investors got together and engineered a short squeeze, right?
Yeah.
So I think there is, for short-term trading, there is perhaps limited capacity. So it is unlikely to take over the world, but I think in using AI tools for risk management or creating new data sets that inform your analysis, that will see, that has great prospects.
Yeah. So in your role at Monash, what are sort of the areas of research that you focus on or your students are looking at?
Right. So, it's sort of the research agenda is relatively new. So we've been focused more sort of on retirement issues. We've done some research on shareholder activism in Japan because that's a good experiment where the government actually encouraged that to understand what impact it has had. And then going forward, and it's a small group of people. Going forward this year, we've got an agenda around climate-related issues. There's a new market in carbon allowances developing in China, and Europe has sort of been around. And with the change in government in the U.S., some of these trends will accelerate. So those are the types of areas that are of interest currently.
Yeah.
But the business faculty is really large, and people are working on macro issues and so on. But there are too many challenges to think about.
Yeah, it's not all machine learning.
No, not at all.
So you did mention that you're involved in a blockchain as well. So we've sort of seen the Bitcoin going completely crazy.
Yes.
On the back, mainly I think of PayPal embracing it. But of course, that's just one application. What are sort of the applications that you're looking at with blockchain?
I think blockchain has the underlying technology of Bitcoin. If you apply it in private mode, I mean, I'm sorry to say this, but you would not be completely wrong if you were to think about blockchain as a wonderful, fantastic version of Google Docs.
Right. How's that?
So in the sense that, in Google Docs, you make a change to the doc and I get to see it almost instantly.
Yeah.
So I think blockchain as a piece of technology has the potential for improving transactions processing and so forth. But it is still in the early days. I mean, but if you want a blockchain run in private mode, which is what Bitcoin, in public mode, which is what Bitcoin is all about, and you need thousands of people with very powerful computers incentivized to solve a cryptographic problem in order to ensure that the latest version that you're seeing is authentic. That's, at this point in time, that is not really practical. But you're beginning to see blockchain-based applications in finance. I mean, the ASX is apparently planning to enhance its trading systems, settlement systems using that technology.
Yeah.
It probably could be very useful in bond markets because, settlement in bond markets takes forever.
Yeah.
Relative to stocks.
Yeah. So probably OTC markets is more applicable to.
Yes.
Yeah.
So I think the blockchain technology has great potential in private mode, not the sort of Bitcoin type, Ethereum type public mode, but it's still the early days.
Yeah. So what do you think about, I've seen a couple of reports where there seems to be more institutional interest in cryptocurrencies. Do you think that's a good idea?
It's certainly a good idea if you are a good speculator. Because there are 600 there are over 600 cryptos around the world, and if you have a small amount of money, then it's liquid enough. But if you were to think about it at a more serious level, so why would an institution be interested in crypto? Say Bitcoin is the most prominent example.
Yes.
You would be interested for a couple of reasons. One is you could say that, this is a store of value. This is an alternative to gold. That I'm very concerned about all the money printing that is taking place, and that may lead to very high rates of inflation, and we have no protection against it. Central banks may lose control of the yield curve, and interest rates could go up by 400 basis points and hammer my portfolio. So you could come up with all these reasons why it's a good idea to own it if you believe in that narrative. But you have to believe in that narrative to take the first step. I want to own some. It's not, if every institution around the world were to put 1% in Bitcoin, then it would be worth $1 million. So there is that liquidity issue, right?
Yeah.
The other issue, which is a more difficult one for institutions, I think, is, so even if you were to take that point of view, that I think for all good reason, it's a good hedge against debasement of paper money. And you got all sorts of other risks. One is, how do you actually own it? What about custody?
Yeah.
How do you custodize it? So there's that. And there are, there's not, I would say that there's not a satisfactory answer to that question at this point in time. And the other question is, are the governments going to just sit aside and allow a digitally created currency to take away the ability of banks and central banks to create money and credit?
Yeah.
So yeah, I'm neither for nor against it, but you have to believe in a certain narrative.
The cult of Bitcoin.
That's right.
Yeah.
That's right.
So what is on your agenda for the remaining of this year? Obviously, we're in a very sort of strange circumstances. The pandemic is still raging across the world. We're luckily pretty well off here in Australia. Has that changed any of your plans?
Not really. I mean, if you sort of, I can do what I do without being on a plane. And I mean, if you look at it, the digital natives like you and me have not had a bad crisis. It could have been far, far worse, I think. So, we are still probably able to do 85% of what we do. I do miss the human interaction. So it's not been it could have been far worse. So I think this year, I'm assuming that it's not going to be very different from last year. And so we're just pressing on with the agenda. My agenda at Monash this year includes overseeing the launch of a venture capital accelerator.
Okay.
That's sort of part of this plan of bringing the faculty closer to industry and government. So in the second half of this year, in collaboration with some partners overseas, we are planning to launch a VC accelerator. And the idea is to put highly scalable startups, early stage companies from Australia and the rest of this region with a group of venture capitalists, both overseas and local. And then we have our faculty and students who would be available to provide assistance to these early stage companies. So, rather than write research reports and distribute them, it's actually saying, we have an expert on blockchain.
Yeah.
And you are trying to build this blockchain-based enterprise, which you think and we think is highly scalable. And we will surround you with people who are technically expert, or you've sort of designed some new product which requires you to think through issues related to entrepreneurship. And we've got a couple of academics who are experts in this area. So that's the idea. So
very hands-on.
Yeah, so that's sort of my big project at the university for this year.
That sounds exciting.
Yeah, which is why I took this job. It's sort of part of my portfolio of interests.
Yeah, fair enough. Well, Professor Kapur, thank you very much for talking to us today. It was great to have you on the show.
Well, thank you for inviting me. Appreciate that truly. Thank you.
Thank you for listening to the i3 podcast. For more information, please visit www.i3-invest.com. Thank you very much.